Welcome to today's review of the True Potential portfolios in financial markets. My name is Matt Henderson and I'm an investment analyst here at True Potential. I'm also delighted to be joined by our investment director, Chris Leyland, who heads up the True Potential portfolios. Chris, 1 month on from our previous video, markets have been mostly positive, although volatility feels like it's creeping up within equity markets. What areas have been the main winners and losers within this period, and is volatility actually picking up within markets?
Okay, in general, equity markets have showed positive returns after actually what was a fairly lacklustre October. The big winners were Asian and emerging market equities, bouncing upwards with investors attracted to low valuations from companies, many of which are actually long been household names in the West. UK equities were the laggards as investors struggled to digest the overall UK political environment. Volatility has been picking up, however, the opportunity set for active managers is opening up as managers look to pick assets up at more favourable entry points.
So Chris, what would you say are the key risks facing financial markets right now?
Okay, so risks continue to be apparent. And I think the reality is concerns are elevated right now. For example, you have the trade tensions between the US and China, Brexit, and also the impact of rising interest rates in the US. And that is very much weighing heavily on investors' minds. I think the key is that you need to remember that these risks matter a great deal if you don't have the high levels of portfolio diversification in place that we offer here at True Potential. Investors need the right solutions to navigate through challenging market environments while investor expectations adjust. Being invested in risk assets, balanced against uncorrelated and defensive assets, offers various layers of downside mitigation based on risk profile and access to upside over the longer term. And this is exactly what we offer with the True Potential portfolio solution.
And Chris, off the back of this, what changes, if any, have actually been made to the portfolio range?
Okay, so looking at the changes that we've made, at the recent rebalance meeting, discussions took place around what are the optimum allocations for each fund manager style within each separate portfolio. So no changes have taken place this month. What you've got to remember is the optimization factors of risk, cost, long-term expected return, and risk-adjusted return, they always remain paramount within our thoughts. It's important to understand that each fund manager is constantly making changes to their positioning. So some examples are Close Brothers moved a little bit more conservatively, reduced their positioning towards US tech, very much cognizant of the high valuations that sector's pricing on right now. Allianz have introduced a 60% hedge on their developed market equities. And I guess that's a way to help partially insulate from adverse currency movement. And then finally, SCI have reduced their UK exposure. And that's a very clear way to increase diversification. So
tricky markets recently, Chris, but what do you see as the opportunity set moving forward?
So there are some actual really strong opportunities right now, and I think first one is the potential for the rest of the world to catch up with the US, which has been the strongest main market performer year to date. Also, I guess a tactical opportunity to invest in emerging market bonds priced in local currency, and that's because emerging market currencies currently are estimated to be about 25% undervalued, and that's by several of our managers. And I think finally, many equities are exhibiting cheaper valuations, and that decent quality corporate credit bond spreads over risk-free government bonds have widened without any noticeable deterioration in credit quality. Long-term investors know that opportunities grow more apparent during periods when panicked investors sell prematurely in response to over-exaggerated risks. Okay, so just before I hand back to Matt, I'd like to take this opportunity to thank you all for your continued support during 2018, and I'd like to wish both you and your families a great festive period and a fantastic new year. Thank you very much.
So to sum up, we still remain constructive on markets moving forward. Risks, however, are clearly still apparent, but it's important not to get bogged down on the negatives as you will potentially lose out on the positives. The key is to stay invested, downplay media scare stories and compound up the investment growth.